Alrighty, well, I'm going to do the same old song and dance we do every time. I'm going to take a look at first all the kind of setup going out of this last week, this continued squeeze. Talk about what we're looking at this week, some of the stuff we have coming up here because we have some more events and stuff happening this week, some pretty big events. We could see some market movement. A little bit of headlines over the weekend so far, nothing too serious. And we'll talk about some of the sectors and stuff that I've been looking at going forward. So, market obviously continuing its squeeze higher. You even had a Goldman trader come out over the weekend and specifically say that they believe that this is nothing but a short squeeze. I mean, we've talked about this before. Mike always says that when you get the best kind of rallies are in a bear market. So this is a great example of a bear market rally. We're squeezing these shorts out, continually pushing higher. Volume is subsiding though after these kind of initial bursts. We did get a nice little volume drop off. This is some of the lowest volume we've really seen since we started this first descent from the all-time highs. So we might be losing a little momentum. We'll see. It was also a really quiet week last week in terms of headlines. We didn't have much in the way of economics. We had Russia headlines, but none of them were really relevant enough to move the market. It was all just kind of background noise. We did get some Fed stuff out there, some analyst stuff, the usual kind of song and dance there. So squeezing up through the previous week's highs, depending on where we open. Obviously on Monday, where the futures open up, we have a lot of stuff we can look at. Would an hourly cut it? Not quite. We'll just go to a 4-hour here. So, whoops. What I'm going to first look at, obviously, is going to be this double top here from back early February. That would be my first level of resistance that I would be looking at, and then you've got a little room until we get to even higher resistance here. We're above all the moving averages. We've now gone over 50% in terms of retracement from the lows to highs. We're approaching that 61.8% retracement on the fibs on the SPY for the year. So we're doing a nice little move here, and I'm not going to bother pulling up the 2008 chart again, but the comparison I keep making is, we had a 2-month rally in there that went up 14% from the lows. If we go from the lows itself, it's we're not even at 14%. We're at 10. 14 puts us up near this high resistance up here. So I'm not saying we're going to do that, but just to put that in perspective. Now, obviously, we get a ceasefire, we get anything like that, could further add to a bit of a short rally there. I'm still long-term bearish, only for the sense that the longer that this goes on, the crazier things are probably going to get in the long run. The more pressure we're seeing, the more inflation, the more recession probability continues to rise. I think it was last week Goldman gave the probability of recession this year like a 30% chance now. So there's a lot of expectations. Goldman, Morgan, a lot of those people think that the yield curve is going to invert next quarter, and that by yield curve they mean the 210. Most of the yield curves have already inverted: 510, 520, 530, 1030. Just grab any two numbers other than 210 and they've likely inverted. So we're really starting to see that pressure out there. Doesn't mean the Fed's going to stop raising rates if the yield curve does invert, but that's typically the barometer for them stopping. But at the same time, you had Citi come out and say that they see 4 straight hikes the next 4 meetings. Citigroup says that they see them hiking 50 basis points 4 times consecutively. That would put us at the end of the year at a rate of 2.75. So that caused a little bit of movement on Friday on the markets. If I zoom in, we did this little drop here on those comments, and then at the same time you had Fed rate hikes and Fed rate cuts in the future all rising in terms of probability, which means the market thinks that the Fed's going to continue to hike into that recession, and then they're going to screw up, go too far, overshoot like they did last time, and then immediately have to flip back to buying when we hit a recession. So no one knows what's going to happen, but it's just increasing the amount of uncertainty and unease in the market, which really makes me, doubt that we're going to be able to make it up to these highs. It's going to take a serious short squeeze. But we had a very over-leveraged, very bearish market in here. We talked about that. AAII reached some of the bearish in terms of the sentiment survey that we've, I think, ever seen. We saw everyone and their mother was piling short. Now you have people like Kramer saying, well, the bear market's over. Probably means we're about to roll back over, but we'll just have to see. Qs, meanwhile, I think have just about finally reached their 50% retracement. So we're hitting some technical levels here. Yeah, Qs closed pretty much right at their 50% retracement from high to low for the year. SPY, like I said, at that 61.8. So we're hitting some interesting technicals here where I could realistically see us rolling over this week if things kind of start to peter out. The decrease in volume tells me that people are slowing down on their covering, probably slowing down on their buying, and that we're hitting some of that resistance now. This is a very FOMO driven market. So if it does continue higher, we could see that volume spike again as people are like, wait for me. I don't want to miss the profits. Qs have a little bit stacked levels here up ahead of them. I'd watch kind of this inflection point here. And then also you have the 200-day overhead. And then IWM has kind of just been stuck. This is a pretty important level here because this level here would reapproach them into the year-long consolidation that they were in last year. It's kind of where we broke down from. So just further resistance here for the IWM. They did reach their 50% retracement as well. That's about the top end of the range. So if the market's going to get through some of these levels, some of these retracement levels, some of these resistance levels, it's going to need a little oomph to get through. Now we do have some economics this week that maybe could provide that. Monday is going to be relatively quiet. We do have some auctions. We have the 2-year note auction, which could be interesting. International trade in goods, wholesale inventories, yada, yada, yada. Tuesday, we have the JOLTS report. And, I always talk about the JOLTS report because at this point, it's just kind of fun to watch how worse this gets every month. For those who don't remember, it's the job opening and labor turnover survey. And every month, we see more job openings than unemployed workers. And that number's going in the wrong direction. So while everyone's touting that the jobs market's fixed, it's great, everything's back to normal, it's complete lies because the jobs market has never sat like this as far as I've seen in history, with this kind of inversion between job openings and unemployed workers, and it's getting worse every quarter that we see there, every month rather, that we get this report. So I'm going to be curious to see what we get here. Now, last JOLTS report, quitting labor turnover did decrease a little bit, but it's still sitting very elevated. So this is a very competitive jobs market, and we could continue to see wage inflation as a result. We're just going to have to watch and wait and see how this continues, because it's just a result of people leaving the workforce and not being counted as unemployment. So we'll see how that continues. But that's on Tuesday, along with consumer confidence, Case-Shiller home price index, Red Book store sales. Wednesday, we get the ADP because don't forget the month ends this week. March is going to end on Thursday, which could also cause a little bit of interesting stuff if we see some month end changing. It's also going to be the end of the quarter, which could be a big deal if we see some quarter end rebalancing in terms of people maybe taking some positions off, putting some on, maybe covering some of their shorts or whatever. So likely we saw most of that happen with options expiration, but it is still possible that there could be some stuff, as people are doing some window dressing for the end of the quarter. They want to have their quarterly reports all nice and pretty. So it is possible that we see some stuff going on this week as a result of that as well. But we also get GDP numbers on Wednesday. So we get GDP numbers on Wednesday, ADP. Who cares about ADP though? Thursday, you get personal income and outlays and Chicago PMI. But then Friday, obviously, is when we're going to get a lot of other numbers. We're going to get the employment report. We're going to get PMI manufacturing, ISM manufacturing, and construction spending. So we're going to get a whole slew of numbers this week. Some relatively big numbers as well. So it's going to be hard to want to initiate a long-term position here in front of a whole bunch of numbers like this, just because I'm not quite comfortable in terms of gauging not only what the numbers are going to be, but what the market's going to react to those numbers. It would almost be like playing something into earnings. So that's kind of the risk that we have, but that's what we have sitting before us. Obviously, we can continue to listen for Russia, Ukraine news, but right now, we're not going to get much movement on anything short of anything drastic happening, both in a good or bad way. So we'll have to see there. And then also, China, we're going to have to continue to monitor China because they do still have their lockdowns going on. Their port congestions reached 5-month highs, but they have started doing kind of like they're setting up bubbles around factories, little COVID bubbles with testing and so on to try to keep factories going. So we'll see if that works or if that helps. But they did open Shenzhen again, which is good. It's going to help some of the ports and stuff ease up, but it's, supply chains are still screwed, and that's going to be the chief cause of inflation and why we're likely not going to see inflation die down anytime soon. But anyway, put a gun to my head. I don't think we go too much higher this week, but I absolutely could be wrong if we get good numbers, if we get good headlines, if the short squeeze piles back in, if we get through this weekend without any bad headlines and we open up higher, you could see just an even higher push. But it's going to be day to day for me. I'm not initiating long-term positions here quite yet, but it may be a time for me to start watching for some shorts. I mean, you look at volatility, we've come off pretty hard. We've come back to what we thought was going to be the new floor. So obviously last week, or last year rather, 15 was the new floor in the VIX. Definitely going to be watching the VIX around here. We're approaching this 20. Going to be where I'm looking for, because this was the last spot that we bottomed out at. VXN kind of at their last bottoming out point as well. And then the RVX as well, actually making a little bit of a new low here. So volatility in the Russell's been just non-existent regardless, compared to the other two. It's actually pretty impressive how low that volatility's been. But this is going to be this is an inflection point here in my opinion. You've got volatility sitting in key levels. You've got a lot of retracement levels on the market. You've got a lot of stuff going on. So I think this is going to set the tone for of pain for other people. So definitely going to be an interesting week to watch in the market. Other than that, I can show like other internals, but they'll all pretty much say the same thing. Percentage of stocks trading above 50-day SMA, we're actually pushing up pretty nicely. They have kind of squeezed a lot of stocks over their 50-day SMA, almost 50% of stocks over their 50-day, over their 100-day, but it's not quite as strong as the stocks trading above the 50-day SMA, which just tells me that it's a lot of the stronger stocks that are being pushed up. You're not seeing as many kind of bargain companies being pushed up. If I go to the stocks trading above their 200-day SMA, it's hardly wiggled off. I mean, it is, but not really, which tells me that the stocks that were below the 200-day, they're more staying below the 200-day, and you're getting the stocks like maybe Apple. Although it spent a day, pretty much literally 24 hours below the 200-day, it's the stocks like Apple and Tesla and stocks that really haven't been compressed below any levels yet, that are getting bought back up. But we'll have to see if that can persist. Taking a quick look at some of the commodities here, obviously oil and gas. We all know, we watch this every day at this point because it's very it's going to be it also we've also seen the market kind of go a little inverse of oil and gas in the sense that days that it's a little weaker, we see a little more pop in the SPY. So we have to continue to monitor this. I have no reason to think that this isn't going to continue higher the longer that this all goes on, but there are background headlines that we need to listen for. Gold, meanwhile, is starting to pick back up. We had gold and Bitcoin headlines in terms of Russia accepting payments for both of those for their nat gas. Bitcoin, meanwhile, was a fantastic break call at the beginning of last week. I could definitely see this continuing. We're reaching very important levels here. I'm still relatively bullish. I'm going to say it. I still think that Bitcoin could continue. I see no headlines out there that are derailing it at the moment. And with the meme stocks running and things, we could see a little bit more risk on. But we need to watch the market also because Bitcoin, crypto in general, and the market have kind of started trading a little closely together, which I don't like. But it's still this is also a bit of an inflection point for crypto, so we could see everything just roll over from here. It is very possible. Dollar, I mean, it's still just in this range. There's nothing you can even say about it here. I could talk macro to death about the dollar, but technically speaking, it's still just in this range. So that's where we are there. Taking a quick look at just some of the stuff that I'll be watching in terms of larger companies. Obviously, I'll continue to watch Tesla because we've now squeezed up to this $1,000 level. Pretty important inflection here for Tesla. If I do a little retracement here from high to low, we're actually at the 61.8, so it's outperforming the Nasdaq right now in terms of how much we're squeezing. And Apple, just had a record, I think 8 days of trading here. I think it was Malik gave me that headline where they didn't, for the last 8 days of trading, never had a day where they gained less than I think 0.6%, and they've never done this before. So this just shows you that we're seeing some serious squeeze in here. We're seeing serious FOMO. Apple at this point, is probably the strongest out there. It's almost at the 78.6% retracement. Like that's insane. That's insane. I mean, Apple's always been kind of the safe haven, if you will, for corporations and institutions, but some seriously strong bars in here for some of these stocks. And I think these two are going to be two stocks definitely to watch in terms of sentiment in the market. I'll definitely be watching them very closely this week to see what we get. I'll obviously watch Burke. I haven't really traded it, but it's sure as hell been fun to watch. Now it does help that Apple's like a third of their portfolio, but still, I mean, Berkshire's just been like on an absolute rampage, like a momo stock right now, and it's been pretty crazy to watch. This is it's not really going to be an indicator or a gauge really. Maybe you could argue it's a value gauge, but I think it's more going to just trade with Apple. So we'll just have to see. Semiconductors obviously had a nice little pop. They got above their 200-day on like the SMH Soxel. Still a little off, but if you look at like Nvidia, this thing has also kind of had a bit of a monster squeeze in here. Kind of helped Intel pick up. AMD got over its 200-day at the end of the week. MU still a little below. MU, by the way, Micron does report earnings this week. They report Tuesday after the close, so we could get some action in the semiconductor space. But this is another sector that kind of has been. This would be a sign for me, as well, if we see the old guard of the stocks in play come back in. But the fact that they're still kind of lagging a little bit gives me a little pause, so we'll see. I do still like Kroger, for technically speaking. By the way, it's still kind of trending higher. I just don't like that volume's not really picking up. I want to see this thing start to elevate. There are still strong stocks out there that have kind of ignored the market weakness. Kroger, Dollar Tree, Costco, AbbVie. I mean, there's like a dozen plus stocks that are just absolute studs out there. So there is still return out there for those who only want to buy things and only want to hold strong stocks. This is a good example of stocks that are really just still outperforming the market and continuing to do so, and they're definitely ones to watch. Obviously, the meme stocks will be in play this week again, most likely. GME, we've watched this every day. It's up to an interesting resistance level here. AMC as well, to a lesser extent, obviously. It's really the GME show. It always has been. Definitely one to watch to see how we go here, because we're getting up to some hot RSI levels where we've peaked out at before. I don't know how much higher we have to go, but I could absolutely be wrong on this, so we'll have to see. This ALLG picked back up at the end of Friday, so I might put this on my list again. Look at this end of week action here, really kind of suddenly curled up and took off. So I saw this after the fact, sadly, but even if this is just a spot to reload some shorts, I'll see if I can get some shares to play. Nikola is alive, kind of, again. They had small headlines in there, but this one kind of finished strong on Friday. Put a nice little shelf here. So there are meme plays out there. Hell, even the weed plays were moving again. It's this weird throwback to this recent bull market we had with some of these plays. So Tilray, I'll watch Tilray again. These are going to be day trades, obviously, but some of these are pretty good. And even Simon's like GFS kind of took off again. So there's a lot of momo plays out there. I think it's really good for short-term traders right now. And even if you don't want to play the meme plays, obviously all the Russian plays, quote unquote, the commodity plays, will be in play. Alcoa, though Alcoa actually had a surprisingly weak Friday, still kind of above this inflection of 91. And Mosaic's obviously been a lot stronger. Mosaic's has been really strong on the open, I think, almost every day last week. Opening drive, had a drop, opening drive, opening drive, opening drive. So it's been very strong, been a very strong stock. Cleveland Cliffs went a little momo on Thursday. This one's been very strong. You could play a lot of the energy plays, Cleveland Cliffs. Oxy did fade off a little bit, but some of the liquid natural gas plays went as well. Look at EQT on Friday. That one exploded higher. RRC popped up nicely, and that was with the deal between US and Europe for natural gas. So you could play a lot of different energy plays in there. You could throw the cybersecurity sector in there kind of as a Russia play. So CrowdStrike, PanW, Bug, whatever the hell you want to play in that sector. Or you could play food, wheat. I think wheat could pick back up. The more headlines we get on there in terms of food protectionism and food crisis. DBA is an ETF that you could play. You could also play lithium. You could play uranium. It's kind of frustrating for me, or not frustrating, but I'm getting bored typing in the same 24 stocks every day. But this is what's in play right now, and I haven't even looked at like Lockheed Martin, but that one is picking back up. The defensive plays are picking back up, so I think those plays are going to continue to dominate the headlines and dominate the moves, including the guys that I've already mentioned, like Apple, Tesla, Intel, Nvidia, and the meme plays. And then from there, you just see what's in play for the day. In terms of earnings this week, it's small, very light, but we'll have, like I said, Micron, Lululemon, Chewy, BNTX, which is a COVID vaccine play. KidPick does reports earnings, and they were kind of a momo play recently, so maybe we get some action there. Walgreens Boot Alliance, Five Below, some small things here and there, nothing too exciting, but that's really going to be it. I think we kind of all see what the action is, and we all see the same headlines, but we've got a lot that can happen this week between all the different economics planned and between all of the continuing escalation out there. It's going to be a very interesting week. And the fact another little sign for the market is always to keep an eye out on the IPO market, because when the IPO market starts heating back up, that's when you know that people think they can make money in the market. No one wants to IPO in a bear market. No one wants the IPO when they think that the investor money is not interested in entering the market. And the IPO market's been dead for a while now. It's been dead all year, frankly. We've gotten like one or two, maybe if that. And right now, there's nothing. I'm looking at what's planned up for the next 2 weeks, and it's garbage. So that also tells you, that's almost a direct measure of corporate greed and investor confidence and wanting to make money in the market. So that's that, and definitely going to be very cautious in this market. But there's a lot to watch, but it's going to be fun. So I think that wraps up the weekly look. But yeah.